Smart money is buying like the banking collapse never happened, and it doesn't look like it's going to continue either based on the charts, the data, the facts, everything that we are pulling from these markets. We have the FOMC meeting coming up this week. Interest rates look set to increase, and the markets seem to be working out all of the issues that have surrounded it for over the last 15 months since that top came in January of 2022. We've got a lot to dive into before the interest rates announcements tonight. So let's get stuck into the charts after you hit that like and subscribe. My segues are getting better to that. So thanks very much, guys. First thing is the Forex factory chart right here. We have the interest rate announcements coming up. For me, it's 4 a.m. Thursday morning. You can see that the market is anticipating a 0.25% basis point rise. We're at 4.75 for the US and looking to go up to 5%. So there's a number of outcomes that can come from this announcement. If there is no interest rate rise, that's more than likely going to be a positive for the market and send them skyrocketing. If we get a 25-point basis hike, that's what the market is expecting. So we're probably going to see a lot of volatility and potentially still go up. If we get a 50 basis point hike, maybe we'll start to see some downside that's prolonged compared to if we got the 0 or the 0.25%. And the final outcome is that we see a 25 basis point drop, which would then be a pivot. But at the moment, it doesn't seem like those are the options that the market is pricing in. It seems like everyone is expecting a 0.25%. So if we got that or less, that is going to be pretty well bullish for the markets. And as we can see from the current chart, the markets are looking extremely bullish, at least in the short term. And of course, in the longer term, we have higher and higher lows forming. If anything did happen, if we got the worst case scenario, 50 basis points, 75 basis point hike, and the market drops, we still have the October low that is holding as support at 3,500 for the S&P. So this is important to know if we're investing in Bitcoin, cryptos, because over the longer period, we want to see the rest of the market increase, because then that allows the risk on assets to also have a bit of a pump. So that's why we're still so interested to see what's going on in the broader picture here. So the banking collapse is almost a distant memory. We are now 12 days from the banking collapse, as I've got pointed out here, around the 9th of March, leading into those lows that happened over the weekend, and then Monday, which was last Monday now, the 13th. This market has now closed just above the 50% level. We know how important 50% levels are. You can see how well the market respects them time and time again, with the major cycle low coming in almost dead on the 50% level from the all-time high to the COVID crash low. That's where this number 3,500 comes from. Now we moved up, got rejected at the other 50% of the bear market, which was 41.55 multiple times. And now we've come back down to our next 50% level, going on to smaller and shorter timeframes here, as the market continues to find its feet as to whether we're going up longer term or go down. And so for what we're seeing with the 50% levels, it is really starting to hold its ground and start to move its way higher, as just in the last few hours, we've closed above the downside, the short-term downside 50%, which is at 402.1. We closed at 402.86. So this is going to be important in the next 24 hours because, of course, we have to expect a lot of volatility leading into these announcements, what everyone waits for. But the good news for the bulls is that we have moved a good way away from the low, and we're now testing the 50% level. So over the next week or two, we really do want to see the market hold above this level, consolidate for that next move up. That is going to put another nail in that coffin for the bears. We're not out of the woods yet as bulls, but in terms of where it currently sits, it's not looking so bad. And this just shows that the smart money is almost forgetting about the banking collapse and believing that that problem will be solved by the government. And it becomes more apparent as we look at the NASDAQ. But first, we just need to pay a quick attention to the volatility index. You can see this is dropping. As a reminder, we want to see the volatility index drop leading into a more macro bull market. This, you'd have to expect, would become volatile again over the next 24 hours because of the high impact news announcements of the federal funds rate, the FOMC meeting, economic projections, and the talks and the meetings that they have after the announcements. So in terms of the VIX, it's on track, putting in lower highs since the October low. You have September here, you have the October low, so lower highs again into this March date. And so it's basically just moving in the direction of the bulls. Now looking at the Dow Jones, again, this is closing above its 50% level for this short-term move here from the peak of March, but it still has another level to overcome. So we come back to the February top. It's still got to get back past 33,000 points. But this circled candle here is the banking collapse. So we've nearly overcome that entire price range. But of course, Silvergate and the Silicon Valley Bank is in the tech industry. NASDAQ. NASDAQ is obviously the tech industry here. This is the chart of the NASDAQ, NDQ. The market is now getting very close to that recent peak in February. This is the collapse right here, 9th of March, Thursday, 9th of March, leading into that low on Monday, just like the S&P. This is basically a distant memory now for the NASDAQ. Of course, we can always come back from this point. There's always the possibility of pullbacks, especially as we get towards previous resistance levels, in this case, 12,880, and the previous lower swing top here at 12,690. Now, just last night, we closed above that level, so that's a good sign to overcome the lower swing top and then work our way back towards 13,000 points. We've bounced off the log downtrend. We've overcome all of the selling pressure that was all of 2.5 days when the rest of the media is telling us that the banking sector is what collapses the market time and time again. The smart money, the buyers who are getting in at those lows, are saying the opposite. I don't know how much more clearer I can make that for anyone who is really considering that the market has to collapse in 2023. There has been multiple signals, there are multiple indicators saying that the market is likely, has likely bottomed in October. We're seeing higher lows. We're seeing break back above previous support and resistance levels. We're seeing further higher lows. We're seeing log downtrend breaks, so the bear market downtrend breaks. We're seeing support on 50% levels. We're seeing breaks back above short-term catastrophic news announcements, which many believe would have crashed the market and should have crashed the market by now. I could continue to rattle these off, but the video will end up being 20 minutes again. So I'll spare you more of my voice and I'll leave that for the next videos. That's what we're seeing in the NASDAQ so far. A nice break above 13,000 points is really going to set this thing up for another move to the upside during this second half of the 18.6 economic and real estate cycle, meaning up. Another way we look at this is with the Home Builders Index. You can see we had a low earlier here on the Home Builders Index in June. Home Builders Index, important because we want to know whether those builders are making profits. And so far, the investors, the buyers, the smart money are saying they will be making profits again if they aren't already making some profits now in their builds. Because remember, this is forward thinking, not backwards in terms of the news headlines telling us what has already happened. A low in June, another low in October, which is a higher low, stronger than the rest of the market because it had a higher low. Then we've just seen the drop into the March low, like the rest of the market, on very high volume, which we've looked at in other videos as well. So this is another strong signal coming in very close to the 50% level. Now, with all of this data as well, I just want to reiterate that it doesn't mean we'll go straight up. We do have to have down days. We do have to have periods where the bears feel like they're getting a grip on the market again, and that fear comes out in the market. So all we have to do is pay attention to where is that volume coming in, where are the support and resistance levels. Like here, we're looking at 50% levels, and of course our swing chart as well. You can see these swings, the significant levels here. In this case, probably around 59 points for the Home Builders Index. But for now, good volume, market's starting to trend up. We really do need to get above 69 on this reading here in order for that next stage of the bulls to take control in this market. Next, we've got Bitcoin, the dominance and cryptocurrencies. But first, a quick word from our channel sponsors, New Brighton Capital. For our Aussie viewers, if you already control your own super or have already made the decision to set up an SMSF, New Brighton Capital specialize in crypto accounting for self-managed super funds. Check out the link in the description where you can book in your free 20-minute consult, and be sure to use promo code Pizzino for a $200 credit off your SMSF accounting fees. The Fear and Greed Index is sitting at greed. Yesterday was even higher at 68. Today we're at 62. Remember, we've been looking at this particular chart coming in, putting in some support as the market found some fear out there, but the higher lows continue at this stage, which seems to be the reason for the market continuing up at this point, just putting in that little bit more strength to the market sentiment in order to be able to push this price a bit higher. Now, of course, we're back at these levels here at around 60 to 70, which during these periods of a breakout in Bitcoin or cryptos, primarily Bitcoin here, we've seen it many times get rejected around this level and have some pretty severe pullbacks. So is now going to be any different? Probably not. I'd probably expect somewhere around here, maybe a little higher if we happen to get another push from Bitcoin, just to push this sentiment up a little bit more. But it seems like now would be a pretty good area for some sort of resistance. If not, then a little squeeze up to 80. But of course, the volatility is probably going to pick up with the FOMC announcement coming up. So we're going to keep our eyes on the lows and the downtrends here at around 30 to 40 on that reading. Essentially, if we can't get back below those levels, if the market is holding up relatively well, 20, 30, 40 on the reading, probably looking at another higher low. I think most of the bears are getting their bags packed to jump ship to the bulls soon, but any sort of pullback from here down to somewhere around 24 or 25 for BTC, then you can expect the bears to come back out and start to tell you that we're going to revisit the lows at 15 or 18 or maybe even go to 10K. The bears still have not left the building yet, and with any pushback to the downside of any of these previous support levels at around that 24, 25, maybe even if they're lucky 22, which is currently the 50% level, you can bet they'll come back out screaming and dancing and clawing for any of those downside targets. But for now, 10K is off the table, 12K is off the table, 15K looks like it's the low, and if they get anything to the downside, I personally think that's a buy the effing dip opportunity. So with that in mind, we can start to clear up the Bitcoin chart here. 20,700 has been a very nice level for us to keep track of what's going on in the market. That's probably gone at this stage. So I'm going to remove that one off the chart for us. Now we have our Wyckoff bullish flip. That's what the BF target is. It's not our boyfriend target. Our bullish flip target, 26.9. Those are key levels where the market changes behavior, which is why we pay particular attention to those. Because if the market can't get above those levels, then you could probably expect the opposite direction to happen. So the trend was up. You can see here on the 14th of March, it got to 26,553. The level to reach was 26.9. So it was a few $100 off that level. This is what we looked at in the bull market of 2021 when Bitcoin was getting to 60 grand in May of 2021 and couldn't push higher. Yet you had 80, 90% of people expecting an $80,000, $100,000 Bitcoin. But you guys that have been around for 2 years now would know that that's the price we were looking at, and we were bearish because that price wasn't hit. That's the reason why we look at these Wyckoff bullish target levels, because we're looking at extreme changes of behavior, and we want to know that the market has overcome those and that smart money is now buying those levels. So Wyckoff bullish flip, 26.9, that is gone. Our next level to the upside, 34.5. Another key level, which comes in at our major 50% level, 34.5. So this is going to cause some resistance as well. Of course, where we currently are, plenty of resistance here if we go back to the previous bear market of 2021. This 2 to 3 month stint here from May, June, and July. They're the levels back here at around 29, 28.8. So there's no surprises and no rewards for knowing that this is going to be a key level of resistance around this 28 to 29K level. Bitcoin may have a bit of a pause here, and we continue to head up from this point after we get some of those news announcements, because this is usually the time in the market where it's waiting to see what happens next in that short term before we can continue on with the trend. Otherwise, we've got plenty of support now to the downside. The previous tops here at 25K, the previous levels here at around 24K, so the 50% level, from the current top, and then the major 50% level with the current top in mind. If the current top moves, then this 50% level will move, but that level at the moment is at around $22,000. So a lot of support for Bitcoin to the downside should things start to break down. And what we are seeing break down for Bitcoin is the dominance, but only on the short term here. We've had a mega push over the last week, breaking past 50% of this entire range, nearly 2 years here, where Bitcoin has ranged in its dominance between 38 and 48%, including stablecoins. Now, if we want to exclude the stablecoins, we've got to turn on our TIA Bitcoin dominance tool here. The market is now up at 53.5% of the dominance over the market. So Bitcoin's dominance without stablecoins included, which is getting close to these previous tops that are put in at around 56%. So it's important resistance levels to note on the way up so that we can then tell whether Bitcoin is going to maybe pause and some of those gains are going to flow over into altcoins and get some pumps in alts, or if we've got that next push in Bitcoin to go. If we turn this back off and just look at the data, including stablecoins, you can see we've got some pretty key significant resistance here at around 47.5 to 48%. Previous top here in June during the stablecoin pump and collapse of last year. Also have that top in October 2021, which was very close to the all-time high, which came in November. And then this period through June and July as Bitcoin regained dominance during the 2021 bear market. All of these areas have been resistance, but it seems like Bitcoin is ready to get it back on its Bitcoin season and pump through those levels, potentially taking out those tops at 49%. And the next levels we have are 56%. Remember, that's including the dominance here. So they're the levels we're looking for any sort of pullbacks on the Bitcoin dominance, which would then potentially mean we'll see some altcoin pumps from that point, like we are seeing today. Now, for those of you that stuck around, thank you very much. You guys are the real goats out there, sticking through my 20-minute long videos, but I'm leaving you some special surprises at the end here. My forecast. This is the stuff that I put out in December, and you can quickly read here what I'm thinking is going to happen next. Probably no surprises at this stage, but just want to reiterate, I don't think there's going to be any sort of land collapses 23, 24, or 25, probably not even into 2026. That is going to be the key here. And for you guys that have been following for some time, you know this comes from the 18.6-year economic cycle, a fantastic book by Phil Anderson, which you can find on Twitter, and I suggest following him. The book is The Secret Life of Real Estate and Banking. This is what has helped me put together these forecasts leading into 2023. The date here is 22nd of December 2022, so 3 months ago to the day. Unpopular opinions at the time. You got to remember what the feeling was like in December. This was at those lows in the SP500, those higher swing lows that were coming in during this period. People were freaking out like we had to go back down to some lows. S&P 500 is bottoming, not crashing. That's what I was saying back then and continue to say. Europe will not freeze this winter. That's a simple one. Most should have seen that, but remember the news was pretty much telling us that Europe had to freeze last year. Real estate's not going to crash, and we're starting to see a turning point in many markets. Second half of last year and first half of this year are buying opportunities. That was when Bitcoin was down at around $18,000 or so. Bitcoin is bottoming, as we talked about last year, and most cryptos are terrible DCA investments. Trading, different story. Fantastic. Get on them, trade. There's going to be massive profits to be made there, which is the other shill here to our TIA members. You can learn how to trade cryptos over there. Some really great content there that go through trade step by step for you guys. Links are in the top of the video description. Like and subscribe. If you enjoyed that, let me know in the comments down below. I'll see you guys at the next one. Until then, peace out.